Hello everyone, happy Sunday. I basically just want to make a quick video, a quick rundown of what I think is going on in the market and what's going to happen over the next few weeks. So let's just get straight into it. I hope you guys had a great weekend and you're probably even watching this for breakfast in the morning. Enjoy your coffee. I'm just going to go ahead and just explain what I think is going to end up happening. So basically, when you look at this setup, this is the daily chart of the S&P 500. When you look at the setup, this is clearly bearish. Okay. Now, immediately, right, in terms of trading, we are at a level of support. We just bounced off of it, whatever the case may be. But regardless, we are close to a level of support in terms of risk reward. Does going short here make sense? No. Yes, it can easily drop lower here. That's fine. It doesn't need to retest any major levels of resistance. The ES doesn't need to bounce back here or back here. Yes, we can easily just fall much lower as soon as the market opens tomorrow or wherever, whatever the case may be. But just because that might occur, does that mean that it's a good trade to take? No. So then you only have two choices to really make. I could either go long or you could wait for a retest of a level of resistance to go short. Now, if you think that the bias and the momentum is bearish, you're going to go with the latter option that I said, which is to wait and be patient for a better shorting entry. So that is currently what I think is going on in the market. I do believe that there is a lot more room to the downside. So that's the only issue is I do think that there's a lot more room to the downside. Going short here is a bit aggressive, but there's just like one of the main things that I also wanted to talk about was the MACD indicator. So this would probably be the first reason that we can go with of why the market has more room to the downside. So essentially, if you look at this MACD indicator, it's a faster acting MACD indicator. The 3, 10, 16. Those are the measurements. And when we cross below the zero line, the vast majority of the time that when we cross below, because currently we're at -3, this fast acting MACD line, the orange line here, is at -3. When we cross below initially, it almost always retests -25. So we're only at -3. And the most recent and the only case that I saw over the past few years was most recently in September, where this fast acting MACD line crossed below zero for a little bit of time, held support in terms of price action as well, and then held support in terms of price action, held support over here, and then just overall just made new all-time highs. And once we made new all-time highs, what's going on right now is much more interesting. And it has a lot more potential for a downside move, in my opinion, because during August and September, when the fast acting MACD line was above zero and it was holding over here, right? What we see now is September into basically the end of October. This was a much longer period, and because it was a much longer period, there was a lot more momentum potentially building up. And because there is a potential of a lot more momentum building up, when there is a bearish setup like this, the potential move to the downside would be much stronger as well, is what my point is. So that if the MACD line continues to fall lower, this would also drop lower as well. But of course, the issue is also elections. So that's going to make things a bit more interesting. And, I guess you could make this number 2, the elections. And the elections would probably be the only thing that I could think that would cause the S&P to break into highs and close above 58.50 and then retest the highs, etc. So if the market responds well to either of the candidates becoming president or some sort of positive news, etc., that would be the only the only other reason how we would probably make new all-time highs, because off of a setup like this, it's pretty bearish. We do have some chips reporting earnings this week, but that's not really going to completely move the market. A lot of these large tech stocks already had earnings. So, just in general, this is a pretty bearish setup. Elections would be the only thing that would cause a bullish move in the market. The third thing is the VIX. So the VIX looks, so basically the reason why the VIX is important and the reason why we look at the VIX is because it has an inverse relationship to the market. So if the VIX is rising, that means the market should be falling. So currently, the VIX is clearly bullish, right? We're holding above. So what we were talking about is the level that I was basically saying that needed to be held on the VIX over the past few weeks was that 1850 to 19 range on the VIX. That clearly held a support very well. And now the VIX is starting to basically hold above 20, 21, and it might reach 24 to 25 in the next few weeks. But of course, just pragmatically speaking, the VIX, we're still holding support. Yes, we rejected off of the highs and off of this large candle here. But the VIX can easily just flatten itself out and hold this $20 range and then, have an explosion to the upside. But basically, it just needs to continue holding the $20.50 range, and it can continue rising. So basically, the VIX looks bullish. If the VIX is bullish, then the overall market should be bearish. So that's something to take a look at. The bonds look bullish, and the bonds look like they are trying to bottom themselves out. So with the 30-year bonds, it's important because it has a correlated relationship to the market. If the bonds are rising, then the overall market should also be rising. And this is clearly, it's trying its best to hold support. And yes, we broke below a major zone already. It makes sense to see some sort of a bounce or a retest of a level of resistance. And just currently right now, the most logical trade to make is to either go long or to wait for a retest of a level of resistance. And that's the similar situation on the S&P that I was basically sharing as well. And the NASDAQ is showing a little bit more strength than the S&P. So this is a daily chart of the NASDAQ, showing a bit more strength in terms of relative bounce. And the Russell is obviously not. So the Russell is showing a lot more weakness currently than the NASDAQ. And obviously Apple is currently trading outside the lower level of the Bollinger Bands. But all of this stuff is because of earnings. So we look at the large tech stocks because of how important they are in terms of where the market should be moving. And basically with Apple outside of the lower standard deviation here of the Bollinger Bands, it gives a higher likelihood that it wants to return back into the mean, into the basically within the Bollinger Bands. So currently, Apple looks, based off of that, we should get a bounce back. That's going to be interesting to see how that affects the market. Amazon is outside of the upper level of the Bollinger Bands. So, but as long as it's holding these levels of support here at 195, 196, this should be pretty bullish as well. Especially this would help the IWM. But you could see that it's basically just knocking at this 200. If it breaks above this 200, there's no reason why it can't continue. NVIDIA is clearly pretty weak. It needs to regain some sort of momentum. above 140. And AMD is also pretty weak. It needs to regain some momentum back above 148, 147.50, which is where essentially like the highs of these candles were earlier. And if we get above 149, 150, that would be essentially reclaiming this trend line. But this was a very, very important trend line that we were watching on AMD. And yeah, this is just, the chips are showing a lot of weakness. We have earnings for ARM and SMCI today as well. And depending on how those do, that is going to be very, very interesting to see how it affects AMD and NVIDIA, to be honest. But this is really going to, because if NVIDIA breaks below 130, 128, then that's going to be pretty bearish and kind of scary for the overall market, in my opinion, because if money is flowing out of the winners, right? Chip stocks were the winners. If money's going to be flowing completely out of the main winner, are they going to reposition themselves into the loser tech stocks, or are they going to wait for a much lower price before trying to buy cheaper? That is the question, and that is the issue. But currently, right now, is it a proper time to start going long? No. In my opinion, it doesn't really make sense to start going long here. And just once again, in terms of a trade, right? We just have to think about what the best case trade to make is. It doesn't make sense to go long here at all, in my opinion. And just across the board, you're going to want to wait for a retest of level of, not across the board, but across the indices as well as NVIDIA. It doesn't make sense to go short here. You would rather go short on a bounce, or you would buy a dip closer to a level of support. But yeah, like it just makes more sense to wait for shorts, in my opinion. But NVIDIA, AMD look very, very disgusting. Microsoft not doing great, and then Google also freaking just what's So I was looking at Microsoft, and what I didn't realize is that Microsoft is also at a major level of support. And it actually does make a lot of sense for them to try to pile in, because they're trying to hold these levels of support. If they can fake people out, but that's the thing. The most pain to retail, just thinking about it from the most pain perspective, the most pain to retail would be if the market bounced and made new highs. That would be the most pain to retail currently. And as I was looking at Microsoft, that's essentially what I was thinking. But the odds of that happening is very low. We have to be pragmatic. The odds of us creating new highs based off of this setup, something like this, is very, very low. And that being said, I don't really think it makes much more sense to try to think about hypotheticals. Right now, we know what is going on currently. We have to continue to see whether or not AMD and NVIDIA can break above certain levels and certain prices. And especially, we're going to have to see how SMCI, ARM earnings do this week. And then, of course, elections. So, yeah, this week's going to be really, really action-packed. And looking forward to it. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I'll see you guys tomorrow. Thank you.